All right, everything looking good. We are live. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8:02 p.m. Eastern Standard Time on January 18th, 2023. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Somebody let me know in the comments everything's coming through loud and clear. What's up, Akis? He said, this man gives us gold. I couldn't agree more. Hex Evolved in the chat. Special sauce. I know that's right. Double dose coming today. And Mark says, hello from New Zealand. Can't wait for the stream. Hey, thanks, Mark. Hello from the USA. All right. So while I wait for somebody to confirm everything's coming through loud and clear, we'll go ahead and take a look at what's going on here. All right. Appreciate that. So we had essentially we got some new data come out. We got some Fed presidents speaking, et cetera, and we saw the traditional stock markets kind of turn around. I shouldn't even say kind of turn around. We saw a little stall out at a lot of resistance, and then we saw a pretty heavy day of selling today. So let's talk about what's going on and what's to come. As always, we're going to start off with TNX. We'll take a look at DXY, oil, the major indices. We're not going to have to go in too deep on them as everything was pretty much in unison. And then we're going to talk about crypto, and we're going to take a look today at the futures chart. We haven't really been looking at it a lot lately because there wasn't really that much of a difference between the spot markets. But now we're seeing a little bit of a divergence again. So very important that we keep that in mind, as oftentimes in the past, we've seen the spot markets obviously dictate price action rather. But this time we're actually seeing, or in some cases, we've actually seen the futures market has been much more consequential, or like where the levels didn't line up, we have went on to hit those levels to fulfill the same algorithms on the spot markets, on the futures markets. So, we're not always sure which one is the leader, but we're going to take a look at both. And I think we're going to find something pretty interesting. We'll talk a little bit about short term too, and essentially what's happening with the trend. All right, so getting started here with TNX. So essentially what happened with 10-year today was very important. It's what we've been talking about for a while. We have obviously a downtrend. We get a bounce, a dead cat bounce, a reflex rally, a counter trend move, whatever you want to call it, to a lower high. Very, very important. And then we go on to make lower lows. Very, very important. We're almost to the target. I know it feels like it's been forever and we've been waiting to get our nut for a long, long time, but we're almost there. We're basically 1 or 2 candles away. So obviously we topped out up here. We're coming back down to retest the 200 exponential and simple. The 200 simple is on top of the 200 exponential, showing that we're losing momentum, obviously. So we're coming back to retest support as we're losing momentum. Oftentimes when this happens, we go on to put in a new high before the actual cycle ends. So not crazy to think, how could this line up? Well, the market's pricing in essentially less rate hikes than the Fed is pricing in. So like we always say, the whole time we had this massive bull market and quantitative easing, we're not going to fight the Fed. So I don't know why all of a sudden everybody wants to try to fight the Fed. So everybody's convinced that the Fed is wrong. Sure, of course, the Fed is wrong all the time. They obviously suck at their job, or we wouldn't have massive amounts of inflation unless that was really their goal the whole time. And we talked about in advance how we know for a fact that the Fed's goal is inflation. The funny thing is, once you have this epiphany and you realize the inflation rate is set at 2%. So the Fed wants 2% inflation. That's important because now let's just take that to the extremes, because 2%, it's like, oh, well, we need some kind of growth. There's population growth and we need it because it helps stimulate. Sure. Let's just not think about those little minor things, and let's just take it full on to the extremes. Okay. What would it be like if the Fed wanted 0 inflation and that was their goal? What would it be like if the Fed wanted negative inflation or deflation and that was their goal? And then let's look at, the other end of the spectrum. What would it be like if the Fed wanted 10% inflation every year? So essentially the Fed's going to say they want 2% inflation because that's a reasonable amount. It's like a mosquito, taking a little bit of your blood. Maybe you don't notice it or you swat at it afterwards and you're itchy, whatever. But if the mosquito is like sucking you dry all the time, you're going to go out of your way to kill this thing. So you have to think about it like that. The Fed is seeing what it can get away with. The Fed is that little mosquito just sucking like 2%, 2%, 2%. They're stealing our buying power and they're funding the government because the government is not able to fund itself legitimately through taxes. So essentially what it comes down to is they're just borrowing money from the Federal Reserve to make up the gap between what they get in taxes and what they spend. So as long as they're running a deficit, they're going to need inflation to essentially close the gap between that deficit. So now that we know like the underlying trend and everything, we know for a fact, and we've been saying it way in advance to this, that the Fed wants inflation. The reason they set the rate at 2% is, arbitrary, but essentially it's because 2% is enough that people don't get mad. They don't get, angry and riot in the streets. Now, it doesn't mean they never get mad or whatever, but we know for a fact if inflation goes on too long at 10% or 20% or 50%, people are going to get mad and be rioting in the streets. So I told you all that, and most of that's super obvious. I'm sure most of you guys already knew that. But if we know the Fed wants inflation, and we take that to the extreme, and we really look at it, how do we know? The Fed, we know they want inflation. They told us that. And yet somehow people act like the Fed is completely messing up right now and they didn't mean it. The only thing the Fed messed up on was the inflation going high to where people are getting mad about it. They got what they wanted. They just got a little more of it than they wanted. But don't get me wrong, okay? If it was up to the Fed and they could get away with it and no one would get mad and it wouldn't break the system, they would easily take 10 or 20 or whatever percent inflation because they can inflate away the debt. And that's the whole point. That's literally the whole point. That's why we went off of a sound money system, is so that you can spend more money than you have. That's what it's all about. It's that credit system. So what is credit? Really, we're borrowing from the future. So we're borrowing spending power from the future to fund the deficits now, to keep the stock market inflated, to keep the economy surging on, all that good stuff. So the idea, so the whole reason we're talking about that is, make sure that you understand what the Fed is saying and what their actual intentions are. The Fed's intentions are to have inflation, but they don't want it to get out of control because then they'll lose their jobs or they'll lose their power or they'll lose the trust of the markets, et cetera, et cetera. But they want inflation. So that being said, right now the market is pricing in, there's basically a big gap. There's like 75 basis point gap between what the Fed is saying is going to happen and what the market is pricing in. So at some point in time, that gap will close. It's just a matter of time. It will close. That gap's going to close. It's a fact. As time passes, the gap will close. Which way it closes, we don't know. So you pick your side and you say, okay, it's going to either close towards the Fed and they're going to be right and they're the guys in charge, or it's going to close towards what the market thinks and the Fed has, already messed up and they're going to make another mistake and they're going to have to pivot and blah, blah, blah. So you're picking your side for sure when you're betting on one or the other. So you just have to decide which one is it going to be. And eventually when it closes, the market's going to have to change accordingly. Because right now we know the market is underpricing the Fed funds rate. So that being said, this is the market coming back down, finding support right here. And then in my opinion, and this does not have to happen by any means, but let's just kind of zoom out on this. In my opinion, what's likely to happen next, and we don't know, we put some hypotheticals for how deep this retracement goes, but that's irrelevant. It could easily stop at the 200s and then go higher. What we did, and this was like months ago when we did this, what we did was put in the two hypotheticals. First scenario is 5-wave structure has completed. That's our blue 5 waves here. And then we put in, essentially like a correction of that 5 waves. A down, B up to a lower high, and then C down lower. That's like long-term what I think is going to happen. We're eventually going to go lower, but we're not going to go back to zero. The other option is before that happens, because we know eventually this is going to correct. The other option is that actually this was the 1, not the 1, 2, and 3. And then this is the 4 instead of the 2. And then this is the 3. And then this is actually the 4 in process right now. And then we're going to put in a 5th wave higher. I don't know which one's going to happen. But based on the moving averages, based on the trend, based on what we're seeing right here on the monthly, we're on top of the 200 exponential and simple for the first time in literally 30 something years. They're blue, for the first time. I mean, the 200 exponential is already blue on the monthly. 200 simple is very close. It's essentially flat. So, if you show me this chart right here, there's 2 things I can tell you for sure. We're in a downtrend for a long, long time, and then we broke out. Those are 2 things I can tell you 100% without a doubt. Okay. And then after that, we can start nitpicking around and say, oh, well, not only did we take out the previous high, but we're above the 200 exponential and simple. That's good. Not only are we above the 200 exponential and simple, but the 200 exponential has a blue slope. Not only are we blah, 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 and we can go through and do all that stuff. But the most important thing is we had a downtrend. We broke out of that downtrend. So whatever's been going on for the last 30 years, as far as, treasuries and yields on those treasuries, is likely either reversing or at least temporarily having a dead cat bounce. So let's just say, oh, this is probably going to get nasty. Okay, so we already have it on. So let's just say we're just going to get a dead cat bounce and then we're going to go back down to 0 again. Well, that's what this fib is for, from the high to the low. So if we fib from the high to the low and we say, okay, where did we get to? We made it up to the 618. I don't know if you can see this all that well in red here, but we made it up to the 61.8. So we retraced 61.8% of the way from, the highest rates, which was like 16%, to the lowest rates, which was basically like 0.5% or 0. So we could be done. It could definitely be over. And that's our ABC first red scenario playing out as we speak. And, likely, honestly, if that is the case, we're going to go lower. Now we may bounce here shortly off the 200s on the daily and then go lower, et cetera, et cetera. But the idea behind that is, and then obviously the other scenario is we come back some and then go higher. But the idea behind both those scenarios is that this was our, leg up or impulse wave or the beginning of, potentially a bottoming formation and new trend. So at some point in time, likely when you break above the 200 exponential and simple, the same way when the trend shifts here, we break below the 200 exponential and simple, we backtest. We return to fair value, we get rejected, we then go into a bear market for 30 something years. So here we break above the 200 exponential and simple, we come back down, retrace to fair value, and where's fair value on the monthly 200 exponential and simple? Roughly somewhere down in this range, like 2.8 to maybe as low as 2.5, something like that. But either way, after that retracement, we could either go lower or higher. But if this is confirming into a bull market, it's telling us, well, actually likely we're going to go higher and probably much higher. If this is actually the beginning of a new bull trend, if we already made it to the 618, we're probably going to go up to, the next fib, which is a 786. So that puts our 0.5 up here at 7.2%. I mean, that's crazy. They were calling me crazy when I said we were going to 5%. And now the Federal Reserve says we're going to 5%. So now everybody's like, oh, they're wrong. Well, I mean, they were saying I was crazy. Now they're saying the Fed is wrong. So soon they're going to be like, well, they did what they had to do. Another mistake. You know what I mean? So the narrative changes as the facts change. But the fact of the matter is, when we're down here at 0, we were calling for, first, well, you've been through all these different levels we went through. But once we start taking out the previous highs, the next target is either a fib or the next set of highs. So we know we have a key target at like 5% that we just kind of fell short of right here, which was like 2006, 2007. After that, we have the fib up here. So very important that we understand right now, there's a massive gap between what the Fed says and what the market believes. So that's credibility right there. So the market is saying right now, well, sure, we know what you want to do, Fed. We know what you say you're going to do, Fed, but you're not going to be able to do it because of X, Y, Z. And that doesn't matter. It doesn't matter what X, Y, Z is. It matters that there's that discrepancy. That's why this is so important. So that being said, seems like we're headed back down here to our target. I mean, we're almost there. We're one candle away now. And then we don't know from there. Are we going to break lower? Are we going to go higher? We can look at our indicator oscillators. We can say, hey, we were at the top of the range right here. Now we're at the bottom of the range. So probably we're going to go higher soon. The question is when we bounce, because we will bounce. Are we just going to bounce and put in another in a series of lower highs and just continue this downtrend, which, all it really is, we're still bullish. We're above the moving averages. But essentially, we just have this little downtrend right here. this little channel-y poo. And I mean, what are we looking at? We're looking at coming down to the bottom of the channel. So when we're at the top of the channel, when we're at the top of the range, it's, probably about to come down. We're at the bottom of the channel, the bottom of the range, probably about to go up. Same thing, about to go down, same thing. So about to go up, probably somewhere back to about 3.6. And then at some point in time, we're either going to break down from this channel and things are going to get nasty and the Fed's pivoting, or we're going to break up from this channel and the market's like, uh-oh, actually we were wrong. The Fed's serious. And, we get the potential higher high before the pullback. But that's very important because people have lost sight of what's actually taking place on these things because they're like selectively looking at, certain time frames. So that being said, let's pop over to the DXY really quick and have a look at that. So DXY came down very, very fast. I mean, it went parabolic before that, but it came down very fast, got almost zero reaction, bounce anything off the 200th. So at this point in time, we're just continually putting in lower lows. We're doing it with bullish divergence. So at some point in time, we're going to get a pop up. Now, when we pop up, again, like always, the question is, do we pop up to a lower high? That's almost certainly the case. I mean, if we don't just pop up to a lower high, and again, this doesn't seem dramatic, but 12% move in a currency is, kind of a big deal. So we're 12% off the highs. If we're going to go higher from here, that's an insane rally and then to new cycle highs. But regardless, seems more likely than not, at some point in time, whenever we do bottom, probably around this area here, we get the bounce back to the 200s, return to fair value. And then if and when we get rejected, then, the markets could really move because that's what we need. And obviously, if you turn on the drawing tool and everything, we're just hypothetically, this is the bottom on the DXY, whatever. But the truth is, really what we're expecting is it to come down here. And I had it drawn in here, in a way that basically this was like hypothetical. So don't actually, you can fib in there for right now, but we're literally just always just a day away from a new low. So don't, use this as, textbook. But truthfully, somewhere around like 97, 98 is the target. But we're definitely building up like another serious drive of bullish divergence. We're on top of the slope line, and the slope line is basically flat, about to turn blue. So, we're very, very close to some bullish divergence popping off. And then at that point in time, we can look to the, 382 shallow retrace, the 0.5 deep retrace, or the 618, all of which would lead us to a lower high. And then likely we get down to the target of like 97 or whatever. And, this puts a bunch of pressure on the markets when we go up. And then this lets the markets rally back up when we go down. Maybe even a new all-time highs. We don't know. Maybe depends on what market we're talking about. So that's DXY. That's TNX. Very important. Been a while since we touched on those. We're going to spend a little extra time on cryptos and a couple of requests as well. So US oil, same thing. Just getting straight beat down. Just descending channel. Lower highs and lower lows. Below the 200 exponential and simple. Confirmed into a bear market. We know what's going to happen. When we're in a downtrend, we're just going down the stairs. That's slinky theory. Every single time we go down to another stair and then we get a bounce up. What is that? That's the slinky going down over and then its tail comes back up and it always puts in a lower high because the slinky can't go upstairs. Well, maybe like the new ones can, but the slinkies that I know of. So that being said, as long as we're just putting in lower highs and lower lows, we expect that to continue happening. So whenever this rolls over and we put in our next lowest high, which seems likely it's somewhere around here at resistance, maybe it's back up here at the 200 exponential. Maybe we make it all the way to the 200 simple and we hit this like little triple top right here. Maybe we break out from there. Maybe we get rejected. But as long as we're putting in lower highs and lower lows and we're confirmed in a bear market, we should just assume we're going to go lower. All right, so Dow Jones. So this was a big deal. We talked about this scenario, how essentially, this was going to be the big resistance. The Dow was what was really going to matter because this had taken out its previous swing. So we have, again, downtrend, lower highs, lower lows. We take out that swing, put in a slightly higher high, hit a bunch of people's stop losses, try to push up, doesn't happen. Try to push up again, rejected hard, retest the 200s. Now it's up to the market. We have an even fight going on. The Dow Jones is no longer undervalued like it was when we were below the 200s. It's no longer overvalued like it was when we were above them. We're basically fair value, maybe a couple bucks overvalued. So at this point in time, the ball's in either person's court. One moving average slanted up, one moving average slanted down. We're technically on top. This is it. If the bulls want to take over, if they're strong enough to take over, if there's enough market participants that are willing to spend their hard-earned money buying stocks in these markets right now, we go back into a bull trend. But if not, we likely go back into the bear trend. So we'll find out. We don't know for sure. But right now is essentially that SR flip where we have basically a resistance level or a support level, and we don't know which one it's going to be. So when we get down to it, it could act as support, and then, off the new highs, when we get back down to it and it doesn't hold this support, then it comes and acts as resistance. Then we go to new lows. We'll have to wait and see. Obviously, we don't know what's going to happen. Right now, Dow looks okay. If we come back down here though, and we lose the 200s, this is going to immediately start looking like, a pattern basically. What do I want? So basically, if this is going to end up looking like, instead of more like that, inverted head and shoulders, if we break down from, I'm going to turn this off one more time. If we look at this as our first portion of the M, that's the second portion of our M. This is our neckline at the 200s. Very important support to hold. If we lose the neckline, lose those 200s, then we just take that measure move from the breakdown of the neckline of the 200s. And then we say, okay, that likely takes us down here to 236. Well, I mean, that's actually like not that bad. Like, it's not ideal if we lose the 200s right here, but it would potentially give us a higher low. And that actually, as bad as it is, because it's like, oh, we got the 200s back and then we lost them, but we put in a higher low and then we can come back up here again and put in a higher high because we're reloading, we're refueling to go higher. So, I had put in the hypothetical situation of this, right shoulder. And originally I had put it down here and talked about how it would actually be bullish if we put in a higher low on the right shoulder, same way that a lower high on the right shoulder would be bearish if we were doing a regular head and shoulders. So, this was possible. That was it. And it was done. It looked like it was going to come back here, up here and test that level. But actually, in hindsight, we may have been right. Maybe we're actually going to come back down here to the 382, which also lines up with that resistance, the descending resistance. And then maybe we bounce from there. Maybe it takes a little longer and we bounce, somewhere around here. We don't know exactly what's going to happen. We don't know exactly when it's going to happen. But if we're prepared for it, we look at these patterns ahead of time, we see how they develop. We could be much more suited to take advantage regardless. But right now, I was talking about it in the group, and, honestly, a lot of the big moves that we were expecting, the nice moves, the clear moves, the one that we got a bunch of signals from the market, clues that were going to happen, they've already played out, at least most of the way. So the best thing now to do is try to figure out what the next move is going to be, not worry about the one that already happened. Try to press it too long. So SPX, we got rejected at the resistance. Exactly. I mean, literally clockwork. I mean, this isn't just us drawing this on a chart. Okay. There's somebody else out there that's really, really important. That's obviously watching the stream and copying my charts, or, it's just super obvious and they're just drawing the same way. Could go either way, but regardless of which one you believe, it's pretty damn obvious. This is a strong resistance. We talked about this. It's the descending resistance. It's both moving averages. And it looks like right now we're getting rejected. Now, what happens after that? Again, maybe we put in a higher low. Maybe we don't. We have to find out. But again, we're at clear resistance. So the Dow looks good. S&P does not. What about the triple Qs? Same thing. At resistance, below the 200s, does not look good. What about the IWM? Okay, so it broke above the 200 exponential and simple. It broke above that descending resistance. So it looks a little better than the other ones. Not quite as good as the Dow Jones because it hasn't really gotten above that previous, it hasn't really gotten above that previous swing high right here. But it looks better than the other two. But how, what would it take for all of a sudden this to look like trash again? I mean, it literally just starts going down. That's it. It's a couple dollars away from being back below 200s looking like trash. So very, very important that we pay close attention to what's taking place. Because what I'm seeing in these markets right now, and I'm not saying that the Bitcoin trend is over, the crypto trend is over, the Dow Jones is going to roll over and go to zero. What I'm saying is there's a lot of clues from the market right now saying that actually what's about to happen is the DXY is getting close to some kind of reflex rally. Commodities, have had some nice rallies already, maybe getting ready to roll back over, gold, silver, those ones. And then also same thing with the markets. I mean, stock market and crypto markets. So we should be very, very careful of what's potentially about to happen and, make sure that we're locking in these gains. I mean, being up, over 20% on basically, 20 trades this early into the year, we should already be thinking about capital preservation. Not that we're not always, but All right, so that being said, not going to go into all the various sectors as we have already done that in the recent stream. We got a lot to do today. So Tesla still looks good to me. So here's the thing about Tesla is, we came down, we got that little squeeze. We took our position right here. We were actually up pretty good off of that candle today. It would have been 26%. We were like 20 yesterday or something like that. Now it's back down to like 18 or 19. I still like this setup, honestly. Like, not necessarily for Tesla to go to like $1 gazillion, new all-time highs or anything like that, but at least for this further back test. I think we hit the 382. We ran into some resistance, back tested. If we stay above the 821, this looks good to me. If we start closing back below the 21 at like 125, I will probably change my mind and just lock in whatever that amounts to, like 15 or 16%. And I'm just going to let it go, because that's just going to look like one of these failures. If we don't lose this area, and a matter of fact, I may even add to my position if this starts to look even better, if we consolidate above the 8 and 21 and it looks like we're going to get the green cross, because we haven't gotten the green cross since back here in September of last year, and that was at the 200s. So we had a pretty aggressive move down since the last time, since the 821 cross bearish. We went down 65%. We're currently down 56%, and that's not even the highs. I mean, we're down from the actual like all-time high. And I'm not saying Tesla wasn't overvalued, but it's down 68%. So this thing has taken a beating. Okay. And the next real support on Tesla right now is way back up here at 236. So we already tagged the 382. So if this rolls over and dies, we know what happens. We get stopped out, or close our position, however you do it. We keep our 15% and we live to fight another day. We'll look for another scalp, either up or down or whatever from there. That's fine. But if we clear this 382, the next real resistance is this macro 236. Now we have obviously the green and the blue fibs on here. Obviously you guys are the same people that always watch my stream, so I don't have to go into like supreme detail, but it's just a difference between the macro bottom swing from June 2019 or the, semi swing from March of 2020. So if obviously the green and then the blue. So we know that both have been acting as support. Here, the 236 is clear support. We break down, find some temporary support at the blue 236, and then we go down to the blue 382, break straight through that. So it's like, wait a minute, is it acting as support? We come down to the green 382, we back test the blue 382. So it seems like the next move, if we're going to go to the upside, is going to first be a back test of the descending channel, which is that first trade setup, 48%, cha-ching, or the 236 in green, if we can push back into the channel, and then it becomes 67% for the second trade setup, cha-ching, cha-ching. And then the truth is, if Big Daddy gets his way, okay, if the crypto trend hater gets what he thinks might happen, okay, I don't want to get too excited here, but let's say we get a back test of 236. We don't know when it's going to happen, how quick it's going to happen, where the 200s are going to be. But right now, the 200s are kind of like on their way to just meet us. They're just headed down here, right? That's where they're going. So it's not crazy to think we get a back test of the bottom of the channel, then the 236, then the other 236, the heart line of the descending channel, and both the 200s. I mean, does it have to happen? No, of course not. Of course not. But I like my odds. So we'll see what's going to happen here over, the next few days. Obviously, if this thing just rolls back over and dies, we just lock in that smooth 15%. We've already locked in most gains on the majority of our other trades. And then we can just go from there. But the potential is there. And I know what you're thinking. You're like, oh man, I know you were talking about Tesla and everything just seems so negative lately and everyone hates Elon and they just cut prices now. And, it's probably just going to go to zero. And that's the best time to buy, right? When everybody else hates it, that means it probably with the exception of like the Tesla plant, like exploding in a, nuclear fire or something like that. Like I would say probably like most of the bad news is priced in. So, are we going to get that 65, 70, 80% rally from where we're at right now? I don't know. But it's easy to find out if you're not in a trade already. I mean, we can just use this little handy dandy little tool right here and say, okay, if we take out the macro low, probably that's not a good thing, right? If we take out that previous swing low, that's probably still not a good thing. If we lose the 821, well, that's not a good thing because, you know, cross back red again. So any of those is, you know, legitimate area for a stop loss. I would say probably losing the 821, starting to close back below here is a pretty good place. 5% with 20% upside just to the bottom of the channel. It's not as good as when we got it down here, but when we bought it down here, you know, it looked like it was about to melt down even further. Like 2 days later, it gaps down. Here, it looks like it's about to cross to the upside and actually is building like potentially some momentum. Bunch of green histograms, blue slope line, hard buy signal, leaving the bearish control zone, Stokes powerfully angled to the upside, very close to an 821 bull cross. You know, there's a strong case that it's like, hey, actually, with a tight little 5% stop loss, tight like a twiga, we could pull 20, 36, or, you know, potentially like 60% on it. So, you know, and I know you're like, oh, you're always opposite of everybody else. Now everybody hates Tesla, and now you like it. But when everybody else liked it, you hated it. Well, sure, when everybody else liked it, it went down 70%. And now that it's down 70%, I kind of like it. That's how we do it. That's why we're always ahead of the pack. So Microsoft, starting to look like it's rolling over. This really has to hold 821 here. We'll see what happens. If it holds, I think we get the push up to 256. We'll see what happens. Once again, you know, back testing that 382, still below the descending. You know, all these markets look the same. A descending trend line and 200 moving averages, putting pressure on them. So it's pretty much samesies. So Apple, I've been pretty freaking clear about my Apple position. This is the back test we kind of expected. It was looking like basically we were going to close the position at like 140 or so. But the truth is, as long as we stay below the breakdown here, the yellow support, and, you know, ideally this red 236, which clearly rejected us as well. You know, we see the 236 and the ascending support line up exactly where we get rejected. Is that a coincidence? Of course it is. You know, also we see, you know, basically this little descending trend line as well. So we have a cluster of resistance right here, a cluster fuck. And why is a cluster so important? Well, cluster is important because somebody out there might not have this line in their chart, or maybe they do have that line. They might have that one. Maybe they don't have this one. Okay. So still, you know, we see all that. So, you know, you can go through it and say, oh, maybe they don't believe in fibs because it's, you know, voodoo magic. So they have these two trend lines, but no fibs. I mean, I don't know what it is, but I know that if we draw enough important lines on our chart that seem like they're very, very important, you know, somebody else out there probably has the same one. And that's what we're really just trying to do, is just do the same thing that everybody else is doing, just like a little bit first. So Apple, you know, basically at the decision point, if we start to clear this, if we get back above, I'm not even going to wait for it to get back above the 200s. Honestly, I'll just be done because that's still another like 7% or so. So Google. So we have a position in Google for this little scalp play. We'll see what happens. I don't know if, I don't know what's going to happen from here, but looks pretty good. Already a decent little bit off the bottom here, but we'll see what happens. We have the 821 crossing now. So, you know, again, if you didn't enter down here, it's not necessarily a bad thing. Obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. But, you know, if you didn't like it down here because it looked kind of sketchy, I'm with you. It definitely looks sketchy, you know, but now the 8 and 21 have crossed green. So there's an easy line in the sand. Okay, we can enter right here. And if we break down from there and start closing below it, we don't want to be in the trade anymore. And if we do, you know, what's our upside potential? Well, just to the top of the channel, not even a breakout, is 9%. So we're talking about 9% versus 3%. You know, not amazing, but it's still 3 to 1. What if we do get the breakout? Because we have this W double bottom right here, which, matter of fact, we were just talking about in the group today, W double bottoms and how to play them and everything. And essentially, we're talking about the Bitcoin trade. We had the big leg down, and then we kind of bounce up, put in the neckline. Then we retest the bottom, and then that's a good place to take a scalp just back to the neckline. And that's one way you can trade it, is the first one. And then the second one is we come up here, we actually break out, probably bump our head on the 200s, come back down, back test, and then we get the actual measure move, you know, which depending on how you draw it, you know, conservatively or, you know, aggressively or greedily, you know, you could go and say, well, actually, this measure move is going to take us, you know, all the way back up here to the 236. And I mean, you'd be right saying that. So, you know, there's two pretty simple trade setups right here. One was 14%, but is already kind of in play. And the other is potentially another 17%. And if you just said, well, I didn't see that, you know, now you could still get into action for either 8.5%, 16%, or 27% if you're bullish. I mean, I think all of these things are going to zero, but it's worth a shot in the meantime. On its way to zero, we could scalp a little something. So yeah, that's the ways you can play a W right here. And then, essentially this would look a lot like Bitcoin as well, where you have the big W, then the neckline here, then the double bottom, and then, one more, like basically just big kind of equal symmetrical point of the W. All right. So Meta still been going strong ever since it closed that gap, been just kind of consolidating around this level. Honestly, in my opinion, this thing looks pretty exhausted. The best thing it can do is just kind of hold here, and then maybe it can make it up to the 200s, 159. Amazon. So we'll see what's up. I can't wait for this Amazon earnings. Honestly, I am excited. So we'll see what's going to happen here with this whole dilly. This maybe is going to come back to bite us. Exactly what we said happened. We're expecting this basically to push up on its way leading up to earnings. This trade set up to play out. And then once it gets up here, which maybe that's it, and it got front run and it's not going to make it. But, then once we get up to earnings, sells back off, hopefully puts in a higher low, and then gets the remainder of the move up to the 618 and the 200 exponential and simple. So we'll see what happens. Again, we've already had like 15+% of this trade setup play out. So not necessarily the best time to enter. And the truth is, if you see a trade setup and you're like, oh man, I missed the stream, so I didn't see that trade setup, or like, whatever, don't just like FOMO into it. Look and see, can you make a new trade setup that makes sense, or do you just have to move on to the next one? So, the idea behind this is obviously breaking back above what was key support as key resistance, closing the gap right here is the second trade setup, which lines up with the 618, which lines up with the descending 200 exponential and simple. That to me seems like the most probable area, because we just have, same thing again, we have a cluster. We have a big air pocket right here, and at the top of that air pocket is the 618 and both 200s. So that seems likely before we go lower, maybe higher, but probably lower. All right, so there's some tech nasty. Let's look at that crypto. All right. So we're going to take a look at the Bitcoin CME futures chart. So it's been a while since we took a look at the futures chart. What we want to do here is just kind of like see how does this look in comparison to Bitcoin. And the truth is, it won't put the moving averages in the same. I was thinking I could actually overlay it on here, but it's not going to put the other moving averages. So we can just flip back and forth. So this is the daily on the spot Bitcoin chart. We have this like support, like kind of consolidation area. We break down from it. We consolidate around here. We break back up to the area we broke down from, reclaim that area. So this just looks like basically like a failed breakdown, or like a, just quick little spring, whatever, turned into a W, looks very symmetrical now. We reclaim the 200 simple and it has a positive slope. For a second, we reclaim the 200 exponential, but, at least back tested both of them. And now it looks like now that we close below 200 exponential, more likely than not, we're going to retest the 8 and then most likely the 21 and the 200 simple at like 19.6. Now I know what you're thinking. Well, should I buy at 19.6 because we're going to go higher? No one knows. Not even the market. But I know there's a lot of other people that are going to buy that level. So, we'll take a shot. We'll see how it plays out. This looks very tired. Bunch of green histograms, couple red histograms, bullish control zone, big knife stab up here, rolls over. We're very close to exiting the bullish control zone and getting that, hard sell signal. I shouldn't say very close. We're still probably a few days away, depending on how aggressive it is. But, again, when we're in the bearish control zone and we get the hard buy, and then the 821 crosses and the blue slope line and all the green histograms, that's when we want to get in. And then where do we want to get out? Up here, multiple red histograms in a row, hard sell signal, the loss of the 8 and 21, which if we go down to the 4 hour, this is what we were talking about in the group. So we went parabolic as soon as we broke back above the 4 hour 200 exponential and simple, which obviously that's, the entry. That's what you do if you're using the strategy. And what happened after? And you're like, oh, you're just saying that now. Well, it's the same strategy we always use. So, okay. So I guess somebody else doing the same thing, or, we're just the biggest whales ever and completely moving all the markets. And like, all 994 people that follow the channel are actually like multimillionaire or billionaires. So we're like the actual market makers, which is possible, I guess. I mean, it seems unlikely, but I guess anything's possible. 821 bear cross seems like it's about to happen. Now it doesn't have to. We could easily rally back up there. So 21,000 is the line in the sand. So if I was shorting right now and we started closing back above 21,000, I don't want to be in that short anymore because, we're breaking out, probably going to go higher. And, if I was long, once this 821 bear cross happens, I want to be out. But, we've been just essentially distributing up through this range, taking profits on the way up actually as well. A couple profits taken probably a little too early in hindsight, but we don't ever know when that's going to be. So, all right. So I showed you that so I could show you this. Remember, we already retested 200 exponential, probably headed back down here. This is the futures chart. 200 simple just now crossed below the 200 exponential. Let's go back here. What happened when that took place here? 200 simple crossed right down below the 200 exponential. We tried to push up to it. It failed. We went to new lows. Does not have to happen, but it's worth paying attention to. Once that cross happens, and keep in mind on treasury yields, we were just talking about that. When the 200 simple crosses above on treasury yields, we were saying it means we're losing momentum. The same way that when the 200 simple crosses below in a bear trend, we're losing momentum. But in this case, we're losing momentum to the downside. We're pushing up. Oftentimes, we still go on to make new lows. So not crazy to think that we're not crazy to think that we're going to go on to make new lows. So what are the things we want to pay attention to? Well, the most important thing right now, clear as day that I see is, well, we just gapped up from 19.5. So we're probably going to fill that gap at some point in time. Maybe it's now, maybe it's in 3 months. And, we're pretty close to 200 exponential on simple, but haven't quite made it there yet. So seems like we're very likely headed to one of those areas. So if we're going up to 200s, we got 13%. If we're coming down to close the gap, we got 6%. We're in a bear trend because we're below the 200s. So essentially it's like, 2 to 1 to the upside. So that's not really, there's nothing really there for me. There's no trade setup I can enter right now that's good because basically this is the trade setup, in my opinion. Whether you're trying to take it bullish or bearish, you have 13% upside potential or you have 6% downside potential. So it's 2 to 1 trade setup for a long or 1, to 2 trade setup for a short. Neither one of those is acceptable. If it was above the 200 exponential and simple moving average, we could take a 2 to 1 risk reward ratio. Same thing if we were shorting and it was 2 to 1, that'd be fine because we're trading with the trend, but we don't have that available to us right now. So we know we made it up to some key resistance here on the futures chart as well, based on those, we have those same fibs in place based on the 3,000 low or the, whatever it was, like 4,100 low. So the 3,000 low is the green one. The 4,100 Rona low is the white one. So the same way we were kind of looking at Tesla and we're like, we don't know which one of these lows to use. Let's slap them both on here and see what happens. So we see clear interactions with both of them. I mean, this was clear support up here. Both 236 is pretty close together. And then once we broke down, we see we're oscillating in between and fighting for, both 382s. And then we break down from there and, essentially just chopping around between them. We recapture the white 0.5 and then we're able to move back to the green 382. And then, what is the long trade here is up to the white 382. And what is the, obviously the bear trade is just to close the gap. So we don't know what's going to happen here. I think more likely than not, the spot market made it up here. Maybe we do both. Maybe we come back down here, fill the gap first, squeeze people out. Then we come up here and hit the 200s. And then we just roll over and go lower. That seems like a very, very high probability situation to me. So based on what we see here on the spot market, on the futures market, we got a pretty good idea. And then this was the exact situation that we laid out in advance. Descending, move down here below the 200s. Eventually, we're going to back test it. Same with the DXY. The difference is, we broke down below the 200 exponential and simple. We back tested, got rejected, went lower. And then now we're finally back testing. So that hasn't happened yet on the DXY. We just kind of shot through it. It sort of happened a little bit on oil, but these charts all kind of look the same. The difference is the Bitcoin chart already kind of had its little pop. Oil and DXY haven't really, but we know eventually it's going to happen. They always have some kind of relief rally and then you re-enter your shorts or et cetera, et cetera. So it seems very likely based on the futures chart that we actually will go up here to like 24 or 25K, but also, 19.5 looks pretty likely as well. One thing I do like about this weekly chart, we've been in this downtrend on the weekly for a while, pretty brutal downtrend. And now we have multiple green histograms. We're above the slope line. The slope line's blue and, Stochs are angled to the upside. Knife is powerfully angled to the upside. This actually looks pretty good. Now, it always looks pretty good right before you get rejected and then go lower. But at least, we're trying. We're building some kind of like positive momentum on a weekly chart, which is something that crypto has not been doing for a long, long time. So it's good to see. So jumping over to ETH, ETH looks okay, still on top of 200 exponential and simple, looks much better than most other cryptos. You know, at this point in time, you could argue for either one that you're neutral, which is what I am. I'm just neutral on everything that's like at the 200s right now. And I said it in the chat or in the group, and it was like the wording of it was perfect. Is right now, you know, when something's at its 200 simple or exponential moving average, it's fair value. You know, based on the last 200 days. That's all we're doing with the moving averages. We're just looking at 200, you know, days simply calculated. We just take all 200 days of price action, we add them all up, we divide by 200, and then we get an average. And the average is this line right here. And when it's sloped to the downside, it's pink. When it's sloped to the upside, it's turquoise or whatever. And then same for the exponential. It just has a weighting applied to more recent price action. So there's slightly more weighting applied to the most recent day than there is every other day. And then the least weighting is, you know, applied to the 200th day. So we use both. Right now, we're basically fair valued. And the truth is, we don't like to play fair. So we're waiting for, you know, a situation where it's either overvalued so we could short, or undervalued so we could long, or, you know, something along those lines, etc. But right now, fair valued. And the trend is technically bullish on Ethereum. Both have blue slope. Now, it's not crazy for that to happen and then immediately to get rejected and then just melt down. So we don't want to get too excited right here because we're basically just back testing resistance. We don't want to look at it as like a line in the sand the same way as we normally talk about like lines in the sand, because honestly, what we're potentially expecting to happen right now is we consolidate here and just slowly kind of hang out and kind of creep up while the indicator oscillator trends down and price action doesn't trend down. So the most important thing we're really looking for, if you just had to, you know, sum it up, is the one thing that matters. And you guys know what I'm about to say right now, because it's the same thing we're always looking for, right? If we want to see what the trend is, we need higher lows. And then after that, we need higher highs. So we have a low, we have a higher low, we're pushing up here, we take out this high, we take out this high, we take out this high, and then we have a low, a high, a higher low, and then a higher high. So that's what we want to do. So the next real area Ethereum has to break above to be super bullish is 2000. And you're like, well, that's $500 away. That's 33%. Well, sure. We could buy into strength. You know, if you're bullish on Ethereum right now, we had this trade setup in play from like, you know, so long ago on that crazy Ethereum video I did. You know, what if Ethereum goes to 20K in the next bull run? What are your gains going to look like? And, you know, something like what, 1200% or something like that. So, all right. So the important stuff going on here from total market cap. So total market cap hit the 200 exponential. This thing looks a lot like Bitcoin, obviously, and has for a long time. When we broke down from total market cap, we already retested the 200 simple. So the move we're expecting in Bitcoin kind of already took place on total market cap, which tells us actually like probably Bitcoin is stronger and most altcoins are weaker. And then we see the same thing here. We already retested the weekly 200 simple, 200 exponentials up here at about $1 trillion. So that's a target for the back test. But honestly, lower highs and lower lows below the 200s, very close to them flipping bearish. This is not good. Now we're building up some momentum, but again, that's what it looks like right before you get rejected, or right before you reclaim your moving averages and go back into a bull market. Nobody knows. So Bitcoin dominance, this is really, really, really important right here, because look, I can't even tell you, if you've been watching the channel for any amount of time, you already know that the Bitcoin dominance chart has made us so many amazing trades. The Bitcoin dominance chart has literally foretold the future countless times. You know, not as much as the 8 ball, don't get me wrong, but enough that it's worth noting. So here we see, you know, what amounts to a channel. We're in this channel. We've been in this channel for a long, long time. May 2021, we've been in this channel. So we're coming up on, you know what, May 2021 to May 2020. So almost 3 years, you know, a couple of months away, obviously. But no, that's not right. Wait, hang on. What year is this? 2 years. 2 years is right. Wait, what year is this? God, it's so confusing. So anyway, two years. So we're coming up on 2 years in this channel for Bitcoin dominance. So a break in one direction or the other is huge, but more likely than not, you know, more likely than not, what's going to happen? We're probably just going to trade inside this channel. So Bitcoin dominance is probably going to go up, you know, 10% up to 48 right here, most likely. But we see the bull cross already happen on the weekly, 821 cross moving up here. Let's look at the daily and see if we see any like things that happen right around like certain times. Okay, look, we get above the 200 exponential and simple right here. Bitcoin dominance goes nuts. We get above 200 exponential and simple right here. They flip blue. Finish the sentence. Bitcoin dominance goes down. Nope, that's not it. Goes nuts. So, I mean, I don't know. I don't know what's going to happen, but seems more likely than not that, you know, we had a massive downtrend and now we're consolidating, trying to go higher. Now, it could easily fail. Maybe we put in another lower high, melts down, Bitcoin goes to zero because, you know, Craig Wright really is Satoshi. And like after that, nobody believes in Bitcoin anymore and just wants to, you know, never, ever speak of it again. Maybe. I don't know. I don't know what the narrative is going to be, but I know what the Bitcoin dominance chart's telling me, that probably Bitcoin is about to steal a bunch of market cap from a bunch of shitty shit coins. Oh no, YouTube. Shh. I didn't just use excessive amounts of swearing. That's it. We're going to lose some more subscribers. Bitcoin dominance less the stable coins tells a much different story. This actually looks pretty good right here. You know, when we remove the stable coins from it, we say, how's Bitcoin look compared to altcoins, not counting stable coins? Looks pretty good. This is a pretty clear uptrend. Now, it's not the uptrend we were looking for before, but, you know, it's still a series of, you know, basically 3 same lows and then some higher lows along the way. So it looks pretty good to me. You know, if this ends up being another higher low, probably we're going up here to threaten the high again. That puts us around somewhere around like 56% or something like that without the stable coins. So it looks like we're starting some kind of, you know, short to medium term uptrend on Bitcoin dominance. And what does that tell us? Well, we know either Bitcoin's going to go up way faster than altcoins, which seems unlikely, you know, in a bear market, or Bitcoin is going to go down and altcoins are going to go down way faster. So Cardano coincidentally rejected at the double resistance as expected. So we have obviously the orange and the red resistance. We came up, we tagged them both, and now we're getting rejected. Cardano just probably going straight to zero by end of stream. Chainlink looks really bad. I mean, it retested 200 simple, which is good. If it goes up 200 exponentials at like 760, if it goes back down, you know, support is at fib at 579. Looks very weak. Alts do not look good. Polkadot broke through the descending resistance, crossed 821 to the upside, began its measure move breakout, tagged the 200 exponential, simple already, 200 exponential, still a little bit of ways above its head, 725. If we go up, that's what we're looking for, 725. If we go back down, we're looking to retest, I mean, essentially the lows, like 457. Not cool. I mean, there's some support around like 517. Again, though, you know, what is going on here? You know, we know if we just follow the trend, and let's just say you can't even see the chart and you're just looking at this right here and you say, okay, is there more red or more green? So there's a bunch more red right here. And then it seems like there's a bunch more green after that. So you could say just by that, well, the green, we know what the green is. The green is a bearish control zone. So if the bears are in control all here and then bulls take control, and then the bears are in control out here and bulls take control, and then bears are in control right here and then bulls take control, what's likely to happen next? Probably bears are going to take control again, and they're going to do it for a while. Because when the bulls have control, it's this little itty bitty little bump right here. Oh, good job, bulls. We're bullish again. Oh, we're in an uptrend. Let's go, guys. Yay, we're going to the moon. Oh, look, guys, we're doing a great job. This is the big one. Okay, so let's look at what that looks like in the actual price chart. Okay, so the bears were in control for all this. And then look, this is, you know, then the bulls came in and they took control. What tool should I use for this? I don't even know what tool I want. I guess we just vertical line it. This is where, you know, we enter into the the bullish control zone. So this is the bullish. So the bulls were in control right here. And then right afterwards, we completely melt down. Well, what about the next time? Okay. So then bears are in control, bears are in control, bears are in control. Bulls are in control right here. They're finally, oh, we did it, guys. Bulls are in control. We're doing it. We're going to the moon. Hooray. Hooray. For Polkadot. It's winning. Oh, and then right after that, that was actually the top. So that was actually, the bulls are like, we're doing it, guys. Keep it up. And then fell on their face. So then what about this time? I mean, to me, it seems most like we're in a downtrend. When the bulls take control, it's probably the top. Probably the top. I don't know. It's probably too easy. Trading were that easy, everybody would do it. So we'll see what happens. It's probably just going to $100 or whatever. BNB is next. You guys know I'm not a fan, but I mean, trade setup's playing out nicely. Ran into the resistance exactly where expected, which is the 382 Fibonacci, the heart line of our ascending white channel right here. Heart line, the dotted orange, and then, reclaiming the 200s. Again, one of the few cryptos that's on top of the 200s. So we got to give it some respect right here. If that holds, the longer we spend above it, the more bullish this starts looking. Matic is next. Again, same exact thing. Looks good. There's potential for more upside, etc. Obviously, trade setup has played out nicely. We overshot the 0.5 a little bit. We're coming back down, trying to retest the 200s. If they hold, we likely get our target up here at 618. If not, we just put our tail between our legs and go for the next one. But, we're not just going to like stick around and take the L. That's a fact. I mean, realistically, though, by the time we break that back down below there, we're just getting out like essentially at break even. I mean, we're still up like a couple percent, but I mean, come on. I mean, right now we're still up 17%. So you could just say, well, F it, I'm out. But why would you want to sell into support while we're above the 200 exponential and simple? You wouldn't unless we lose those levels, at which case, where would your stop loss be? Well, basically our entry from before. So we're in a free trade right now. If it blows up, we're back to break even. If it doesn't, we're probably going to be living on an island. No, we're going to be living in a van down by the river on an island. Everybody wins. All right, so we got a couple of requests. Full disclaimer, I don't know what these are. I've never heard of them. They're all definitely going to zero. What else? They're not good companies. They probably lose all money, and they're no doubt at like either all-time or cycle lows. So definitely don't buy them because they're going to zero. Now that the fun part's out of the way, let's see what these charts are. So the first one is QS, QuantumScape Corporation. And no, I do not like full on do like technical analysis and deep dives on these and study the fundamentals and stuff ahead of time. I just punch in the ticker and then we do it live together on stream. Because I think that's the best way to learn, seeing like what I would do for a chart from scratch. So obviously nothing on here. Let's see what happens. So obviously this thing is live in August 2020, goes parabolic, higher low, goes parabolic, and then, melts down after that, takes out that initial low. So very, very important that nobody who has ever bought this ever is in profit unless they're like this guy right here, or like, basically this little thing right here. So, it's been a while, guys, but just remember, red is all the people that are losers that have ever bought this. That's all. Anybody that's ever bought in the red is a loser. And then anybody that's ever bought in the green is a winner. So even if you're the winner down here and you buy at the right spot, keep in mind that every time we go a little higher, we get a little less losers, but every one of those losers just wants to dump on your head and just get out of this horrendous position that's down exponentially from the highs. And when I say exponentially, what is this down? Like 95% or something? Yeah, okay, 94.58%. I swear I don't look at these ahead of time. I literally just saw 140 and 7 and just did a quick mashup. So anyway, so keep that in mind, all right? Because I'm going to say stuff that, maybe is good or maybe bad, but just keep that in mind. There's a lot of losers. So if we then just go from that first low to the all-time high, and then we're just going to extend it way out over here and see for our fib extension. Okay, so we hit the 1.236, which is our first fib that matters. So from our low to our high, we came down here. We came all the way back down 100%. The round trip, round trip ticket, all the way back to where we started. Everybody's a loser. Who's selling? Who is doing all this selling? Is it the people that bought in right here, or is it the people that already owned it before it went, live, public, whatever? Obviously, it's probably the majority of people that already owned it before it went public. So technically those people aren't losers, but they're turning, investors into losers. So that being said, we hit the 1.236 perfectly. That's a really nice area to see, a reflex rally, dead cat bounce, whatever you want to call it. That one candle alone, 45%. So do you touch it after it goes up 45%? Of course not. Of course not. But it's still down so much from the highs, you know, asymmetric risk reward, maybe. So now obviously we'll just go through and we'll put in our descending resistance and see how that looks. You know, roughly something along these lines. So we're just going by closes on the weekly. So close, and then, you know, kind of get a wick there, kind of, definitely. And then again here on the support on the bottom, we only really have like 2 touches. Arguably, you could just say that's like one really long touch. That's what she said. But we see this like pretty good interaction with the heart line here. We see some kind of along here, and then we see this bounces like right off the heart line, and then 1.236. We got a cluster here. And then what? We got a cluster of resistance too, the 200 simple and the channel. So hard buy signal. What happened the last few times we got the hard buy signal? Left the bullish control zone or bearish control zone. We had a nice little rally right here. We had a nice little rally right here. Nice little rally right here. And again, you know, just to be consistent to what we did on the last one, you know, the hard buy is one thing. Exiting the bullish control zone or the bearish control zone is one thing, but doing both is the trigger. So this is when the trigger went off right here. I'll turn it red so it actually like corresponds with what we would think. So this went, you know, a little bit higher, obviously, and then tops out right here. So, you know, that basically when it exited, the bulls took control and started moving it up here back to the upside, or the bears lost control. That's when the rally took place. So again here, you know, we left the bullish control zone, bearish control zone. We get the hard buy signal, and that is the top right here. And then again, same thing right here. And that is basically the top. And now that's exactly what we're looking at right now. So what we need to watch out for is all the energy to get us out of the bearish control zone. You know, the bull is basically pulling us back to like semi-neutral, or the bears just giving up a little bit has essentially just taken us back to the resistance every time. So we have to expect that's going to be the case again. And, you know, obviously we're seeing it play out in real time a little bit already. So the truth is, you know, what you're looking for if you're going to be playing this thing is basically the breakout move of the channel. So if you're looking to play this, you know, to the upside, obviously, is what people are looking at this for. You know, the upside, I'm going to get rid of this now. The upside breakout measure move is just the distance of the channel. And that would take us potentially back up to, you know, at that point in time, once we put in a 236 bounce, which we're probably very, very far from doing. Yeah, the breakout will have already occurred on the 236 bounce up to like $11. So it'll already be up like 50% from where it's at right now. So the real question is, okay, you want to buy the breakout right here? Do you want to buy support when you get down to it? You want to buy key fibs? You want to take a shot in the dark? You know, what is the risk reward if you just said, okay, well, you know, I have a bunch of money in my account and the government's going to take it away if I don't spend it on, you know, they give me a list of just 10 horrible, horrible stocks based on the chart, and I have to pick one, or they take it away. So what's your upside? 221%. What's your stop loss if we put in a new low? 24%. Is that kind of crazy? Is that a little ridiculous? Well, we could look at, you know, a key area of support along the chart. This was pretty key area right here. It acted as support, and then we broke down from it, and then it acted as resistance. So, you know, this was already the equivalence. It acted as support, and then we broke down from it, and now it's acting as resistance. So if we're going to break out from here, if we're going to go higher, you know, this would be our target. Well, we already did that. You know, it would be from the 1.236. So that's already in hindsight. So the next target we have to really be looking at is basically that same level again, you know, or you could say the 236, you know, is the minimum. So that's 55% upside, 23% downside, 2.3 to 1 risk reward ratio. Obviously very, very bearish chart. So there's really not a trade setup from here where we're at right now. We're already too far off the lows, and the next target to upside is not enough. Now, arguably, if we get back above the 8 and 21 and we start closing up above there and we start breaking out from the descending channel, you could say, okay, I'm going to have a tight stop below the 821. If we start closing back below then, I don't want to be in this trade anymore, you know, whatever. So 12% stop loss, and then you can start looking at, you know, some of these targets to upside, and there's actually something there. But in my opinion, the move already happened. You know, the best time to buy this chart was a few days ago. Well, how would you have known to buy that level? Well, the Fibonacci extension. Well, what other levels could you look off of? None. There's nothing else. It's free fall. You know, the same way a blue sky breakout, we can only target using fib extensions to the upside. You know, free fall to new all-time lows we can only target using fib extensions to the downside. So in my opinion, the move already happened on this one. One day, you know, with potential bullish divergence, we have a big low right here, not as low right here, and then a even less low right here, and we're back on top of the slope line. The slope's flipping blue, and we're coming out of the bearish control zone, and there's a hard buy. Maybe this will be the time when it breaks out. Maybe this will be the time. Definitely a possibility. But I mean, I wouldn't count on it. Every other time it got rejected exactly the same. So I would want some kind of, you know, something telling me like this time is different other than just the way I feel or my emotions. So next one is ESS Tech GWH. So goes sideways forever. Nobody cares about it. Melts down and then just goes absolutely parabolic. This is the absolute most beautiful example we could ever see in all of existence on planet Earth of a spring. So you're in a clear trading range forever, okay? And of course, it looks like super violent right here. But, you know, this is the trading range, is this area where we're just going sideways. Goes sideways forever, finally breaks down, squeezes everybody out, and then just goes absolutely parabolic. I mean, it's not market manipulation, bro. 28% down, followed by 300% up. So, I mean, that's 100% a squeeze. I mean, even if you just said I didn't have a stop loss, so it just went down and, you know, I felt bad about myself. And then the week after that, I was up 186% and I did nothing. I mean, we know what that is. We know what that is. It's not real, obviously, or it would have been sticky because what happened after that? Fake breakdown, goes parabolic, you know, distributes everything on everyone all at once. No, actually, slowly over time. So it looks terrible. Obviously, complete garbage. There's really nothing we can do here because this chart is just so absolutely garbage. If we go from the low right here to the high right there, you know, we can kind of use like Fibonacci extensions. So we kind of bounce. I mean, we see some decent interactions at some of these key fib levels. It doesn't look like textbook, I mean, by any means, but lower highs, lower lows. The 2.0 is basically the next target. Not a big fan of the 2.0, but some people use it. So I don't know. This one, you know, again, we have a low right here. We have a lower low on price action. Some bullish divergence on this thing. You know, is it just going to bullish divergence forever though? I mean, I'm sure people right here were like, look at the bullish divergence, bro. It's going to go crazy. And it did. It did go crazy. It went 75% crazy and then to new lows. So traders crushed it. You know, hodlers got destroyed. Same thing. We don't really have like as clear of, you know, like a channel type situation. Oh, maybe we do. We probably have a little something. Probably a little something along these lines. Yeah, I mean, pretty nice actually. Double top and or like two on top, two on the bottom. So where we at? I mean, we bounced the heart line trying to make a bottom. Pretty much. I mean, we gave up all of the last 4 weeks worth of, you know, bounce, whatever you want to call it. I mean, it's starting to build some, it's trying to build some momentum up, but I mean, it's at the lows and it looks like it's going lower. So is there bullish divergence? Yes, kind of. Is it going to play out eventually? Sure. But we can't really call this bullish divergence until it actually like rolls over. You guys know I like to use at least like 2 green histograms or, you know, make just whatever it is. You could be like, well, I like 1 histogram. Well, I like 3. Well, I like 3.5. You can do whatever you want. Just make sure it's in your head. 2 histograms is where I pay attention. 3 histograms is where I buy or, you know, whatever. But yeah, I mean, it looks like it's headed lower. And last but not least, we have Solid Power, SLDP. So, I mean, broke out, gave it all back, consolidated, new high, broke down. Everybody's a loser. So, you know, same thing, but I'm not going to put it in. But just look at how wrecked everybody that's ever bought this is. And there's like nothing we can do on this because it melted down so badly. There's not really like the 4.618. I mean, how do you know though, right? Like you think, oh, I'll buy the 2.618. That's got to be the bottom. And then you're like, oh, 3.618. It stopped there. And then you're like, well, I mean, Why not the 4.6? I mean, at this point in time, it's just like, whatever. 2 green histograms on the weekly. Very close to the cross on the stochastics. You know, still a ways before it exits the bearish control zone. It's at like 10 right now. 20 is the exit. There's one blue slope line, so that's a start. No bullish divergence. I don't know. I mean, and again, obviously you don't want to touch this thing because it just shot up 30-something% in a day. So, I mean, I don't know what this is. Bed Bath & Beyond have another shaker or something? I don't know. It looks terrible. Looks absolutely terrible. I didn't look at like any of the fundamentals on any of these things. Positive earnings. Okay. Let's look at one real quick and just see. So, I mean, that's 511 million. You know, not exactly massive. I mean, it's basically like, I mean, it's not like bleeding money. Net 5 million, net 31 million, net 10 loss, 13 positive, 12 negative. So it's basically like borderline, like profitable. Balance sheet's not bad at all. Total assets, 597 million. Total liabilities, 44 million. You know, 7.5 debt to asset ratio. I mean, that's pretty freaking good. You know, essentially, if they had to liquidate all of their assets right now, they could get 600 million for them, you know, roughly, whatever. Let's say minus 33% discount. You know, so they get 66% of that. Well, they can easily pay back the 44 million they owe, and then the company is still trading at a discount of market cap. You know, not a ton, but some. So yeah, I mean, honestly, the trailing 12-month earning per share is 13 cents. I mean, it's basically flat. It's break even. It's trading at 20-to-1 earnings for the PE ratio for the trailing 12 months, which is like the last 12 months. I mean, honestly, this doesn't look bad. I don't know what this is. I would have to actually look into it. Solid Power? Actually, that does sound familiar. Yeah, I mean, honestly, the chart looks terrible, but like the fundamentals don't look bad, which is why I trust the charts more than the fundamentals. I mean, it's down 80% from the all-time high, which is like just some crazy wick up here or whatever, but it went down 86% at one point in time. And if you just, you know, got in around the entry and just hodled it down, you were just like, I'm going to hodl this all the way to 0 or 1,000,000, whichever comes first. And you're like, oh, I think 0 is going to win. 70% still. I mean, so there's a lot of people that are honestly down, like underwater, like 70% plus in this thing. So again, it's going to be a lot of selling pressure, but you know, we can see from this, you know, arbitrary tool that I use just to measure from, you know, basically where you would enter, which obviously, you know, here's a support level, very, very important support level. We lose it. We come back up, we retest it. So that's an SR flip right here. And then, you know, obviously, again, from this arbitrary level that's not even intentionally drawn on here, we can see this other little cross line right here. And that's obviously like support level. And then once we lose that, it seems likely we would come back up and retest like 460 to like 531. I mean, I don't know. Let's hypothetically, obviously this thing is going to 0 and will never, ever go up ever. But let's just say hypothetically, the crypto trend time traveler came back and was like, oh wait, no, this would be the stock market trend. This is the clean energy power trend trader comes back from the future and is like, bro, that's it. It's done. Oh, look, we hit the 236 already. It's already bottomed out, my dude. We may come back down and sweep the lows one more time, but it's a buying opportunity of a lifetime. Yeah, I can see that. I mean, we already hit the 236 basically. So, you know, we can start legitimately like fibbing this thing. So I think the real question is, you know, I mean, I wouldn't want to buy now, obviously, but you know, if we roll back over, slight rejection off the 8, I think you look for a higher low. You know, and that's on the weekly. So, I mean, honestly, on the daily, you know, the 821 cross just happened on the daily. So maybe we come back down, back test it. But, you know, if you're trying to play this to the upside, just this scalp right here, I mean, realistically, it's like 83%. But I mean, I think we came off the lows already like 40%. So it's like 31.83. It's almost 3-to-1. So You know, if you had to like fudge it a little bit, or if you had to fudge it a little bit, or just be patient for it to like backtest 821. I mean, I wouldn't want to let it get away from me. If you're like hyped about this, the idea is though to buy the 821 crosser and come back down to it. And you know, if we go to new lows, you don't want to be in that trade anymore. And the target either being, you know, the next fib level, the 382, or potentially the 0.5 is like pretty important. So if we say the 382, it's 59% with a 25% stop loss, not really acceptable. So the, you know, obviously the other option is, you know, you enter into the trade now and you're buying into momentum, expecting a pullback at any point in time, but saying, hey, we stay above the 821, I won't get stopped out. 12% stop loss at like 253-ish. I would want that to be like a soft stop. Like I'm watching it, you know, at the daily close, deciding if I'm going to close it out. Not like, oh, it's going to wick down, I'm going to get stopped out, and then it goes up 80% or whatever. So 45% upside, 12% downside, it's like 3.6 to 1. You know, but then again, if we retest the 200s, you're talking about 85%. But the real question is like, well, if we have the same exact setup right here from SLDP, or we have that same setup on Tesla, which one do you want to try to scalp on? You want to scalp SLDP or you want to scalp Tesla? You know, it's not like literally picture perfect exactly the same way, but pretty fun close. So, all right, we did it. We made it to the end. We looked at all the stuff. We talked about the things as well. Yeah, we're done. And gold's recharging for a little bit. Done. All right. Jump in the chat right here and then we'll wrap it up. Todd Schultz in the house said, fuck you. Nope. Sorry. Thank you. Thank you, Todd. Appreciate you. Mark says, do you have a video on how to read, understand, use the Joule Thief? Yeah. I think it's for the old copy. You know, I really should go back through and you know what? Maybe that's what I'll do is go back through and redo all those old videos because a lot of check the Indicators series. It's a playlist on the channel. And there's definitely one in there I think there's one for the old Joule Thief. There's 2 copies published publicly. And there's definitely one in there for one of them, but not for the other. And then there's a new version of the Joule Thief, which is what I use on stream. And that one is only available to the group members. Because obviously it's the best. And same with the master, you know, the moving average one I use here. But I'll go back through at some point in time and like update those videos because I made most of those indicators like multiple years ago. I think like 3 years ago or something like that. And I haven't updated those videos in a couple of years. So it's probably about time. I mean, just the overall quality of the stream since then has come up exponentially. So yeah, I'll take a look myself, Mark, but that's a good point though. I'm glad you brought that up. All right. Well, excellent. We'll go ahead and wrap it up there. Hopefully everybody had a good time. Enjoyed the stream. Didn't mind too many of the F-bombs. But yeah, we'll wrap it up there. Remember, obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. If you listen to anything I say for any reason other than entertainment, you'll end up living in a van down by the river. We all know that, obviously. But, you know, it might not be so bad if you're into that stuff. But yeah, I guess that's it. So, see you guys on Sunday evening for the Sunday evening live stream. Because I'm not doing one on Friday. I'll make the videos instead. So everybody wins. All right. So it is Wednesday, 9:20 p.m. Eastern Standard Time on January 18th, 2023. I am, of course, Crypto Trend Trader. That's it for the stream today. And I'm getting out of here. Everybody have a good one. Always appreciate you guys tuning in. Make sure to smash up that like button and all that good stuff as well. You know, and if you don't enjoy my streams or just me as a person, go ahead and unsubscribe because, I mean, might as well, right? All right, I'll catch you guys on the next one. Peace out.